Today, I want to talk to the young people out there that aspire to become homeowners one day and wish they were homeowners right now or are working towards it in some way, to try to give you an idea of how other people who are your age have already done it. And mainly, we're going to be talking about Gen Z, people who are in their mid-20s roughly. And according to Redfin, as of 2023, actually already about 30% of Gen Zs actually own homes, which is kind of a surprising stat, given everything that we see going on in the housing market today. But one thing that's really helping Gen Z out right now is the fact that they are willing to adapt and look outside of the very expensive coastal markets that they might have been born and raised in, and are looking for places that might offer some fresh opportunity and might be like a up and coming area, so to speak. Gen Zs are also prioritizing walkability and community over square footage, which we'll talk about more later in this video. And some of them are even taking advantage of flexible work arrangements and are moving to lower cost regions. But they are not doing it by themselves. Some of them are, but don't be fooled. Many of them are getting help, guys, and that is the truth. So if you look around and you realize that there's nobody that can help you buy a home, don't feel bad that somebody else who does have that advantage is getting ahead of you, because naturally that's just the way the world works. People that have more than you, people that have generational wealth, are going to have more than you. It just is what it is. Because here are some of the strategies that Gen Z home buyers are using to get into the market today. Family assistance and gifts, okay? Many rely on financial help from parents or relatives for down payments. This is the reality of what's going on right now. And it's partly to blame of why the housing market has gotten so overly inflated. It's certainly not the only reason, but it is definitely a chunk of it, of why people can't afford homes today, because you have older folks that can afford to give people who otherwise wouldn't be able to enter the market a down payment and a leg up, maybe even a co-sign on the mortgage to get into the house. And then that takes a home off the market that somebody who doesn't have that assistance would be able to potentially buy, and actually lowers inventory and increases prices. So that's how this kind of snowballs in the long run. A lot of them also have to use dual incomes in order to purchase. Young couples or even friends are pooling their resources together in order to qualify for mortgages. I mean, people have done this for ages. In the past, nobody had to do that. Prior to the 1960s, really, maybe even the 1970s, one income was enough to buy the typical house in America. And that all changed once the dollar went off the gold standard, which we're not going to talk about in this video, but you can just look around and see that gold has now surpassed $4,000 an ounce. And that'll give you an idea of why people don't have money anymore. Gen Z is also using creative financing options, which to me is not creative financing. It's buying a house before you're truly ready. Options like FHA loans, down payment assistance programs, or things like that. And listen, I'm not saying you shouldn't take advantage of opportunities that are out there. Like, okay, yeah, if they're going to give you some free help to buy a house, why wouldn't you take it, right? But just understand, if nobody took any of that stuff, then homes would be more affordable and no one would need any of that stuff either. Kind of like what's going on with student loan debt, and now what could be happening with healthcare if all these subsidies that people are used to getting through Obamacare expire and they'll no longer be able to afford their health insurance. None of that would have been a problem if we never had any of these subsidies to begin with. And then some of them are using side hustles to get ahead, working 2 or 3 jobs, doing gig work on the side of their regular work in order to save extra, pay off debt, and increase their income, are all ways that you can get into homeownership at an earlier age. And there's actually some key areas across the country where Gen Zers are buying the most. Grand Rapids, Michigan is actually leading the nation right now with 31.5% of mortgages coming from Gen Z over there. And the median home price is a little over $300,000, so definitely somewhat on the pricey side, but also very affordable compared to many areas across the country. Salt Lake City, about 25% of mortgages over there are from Gen Zers. That's definitely a pricier market at $400,000 median home price. Milwaukee, Wisconsin, about 24% of buyers there are Gen Z, and I can't believe that the median home price in Milwaukee now is $400,000. That just is a stat that blows me away. Milwaukee was one of those Midwestern cities that was always extremely affordable. Just like the next one on this list here, Des Moines, Iowa, 21.5% of Gen Zers are buying over there. Median home price, $267,000. I've been to Des Moines, I've been to Milwaukee also, and if I had to choose one, guys, right now, I will tell you this, I would choose Des Moines. Because Des Moines, in my opinion, is a safer, smaller city. The downtown is very upscale, and the fact that median home prices there are only $267,000 still is pretty wild. And then Omaha, Nebraska comes in last here at 21% of Gen Zers buying there. Median home price there is $274,000, which still isn't bad in 2025. So one of the overall themes you can see here that young people are gravitating towards is they are not interested in buying $800,000 or $1 million homes, not only because they probably can't afford it, but also because that's not attainable. That's not something to shoot for, especially when you're that young. If you want to get into home ownership, you have to go where you can actually afford it and where there's opportunity. And clearly in these 5 cities, which are all pretty much concentrated in the Midwest, by the way, is where it's at. And it might not be what everybody wants to hear, but that's where the opportunity is right now. Like, here's a perfect example of what I mean. I'm in Terra Linda, California today, and just happened to be walking past this house for sale. It was listed for sale back in August this year of $1.375 million, and then they took a $60,000 price cut back in September. And how many people in this age range actually have this kind of money? Even if you are an adult in your 40s or 50s, you might not have the money to buy a house this expensive. So if you want to become a homeowner at a relatively young age, you have to get stuff like this completely out of your head. Does that mean you'll never be able to afford anything like that? No, definitely not. It just means that now's not the time. It means that you have to wait until you actually do have the money and go where there's better opportunities for you, just like so many other people are doing right now. And clearly it's working out for them. Gen Zers are also prioritizing things like a nice community, walking distance to parks and local amenities, coffee shops, things like that, as well as easy access to public transit and some outdoor space. But the point I want everybody to understand here is just by thinking outside the box a little bit and being willing to go somewhere where a lot of people don't want to live. Like, that's the honest truth. Like, I'm from the Midwest. I don't want to live in the Midwest anymore. It's just not for me. But I'm also not, 25 and desperate to become a homeowner and struggling to buy my first house, because if I was, that might change my perspective on moving back to the Midwest, So it's all about prioritizing things in life and making sure that you're being realistic with what you want so that way you can get it. Now let's talk about the Fed rate cuts and how this may or may not affect mortgage rates, because so many people, including economists, including Donald Trump, our president, including many other people from the government and big CEOs of companies, believe that the Fed cutting interest rates will lead to a situation where mortgage interest rates will become more affordable, but that might not actually happen. Case in point is last September of 2024, the Fed started its interest rate cutting cycle after hiking rates for a couple of years due to inflation. And what happened was they kicked off their rate cutting campaign with a 50 basis point rate cut. But then actually what happened is 30-year mortgage rates actually rose by 80 basis points. And prior to the Fed rate cut, the mortgage rates were going down, but then skyrocketed back up shortly after the first cut happened, and even got back up to in the 7% range in the early days of 2025. Fast forward to right now, 30-year mortgages are sitting at around 6.3%. But the big issue is that the Fed and the government combined have not squashed inflation as they promised. And because inflation expectations are still very elevated, these bond yields are climbing along with the mortgage rates, because mortgage rates track what the 10-year Treasury is doing. And as long as the 10-year Treasury is moving in an upward direction, you can guarantee that mortgage rates will be as well. And here's the thing. As long as inflation expectations remain high, it probably isn't going to matter at all what the Fed does when it comes to interest rate cuts, because they're planning on still cutting more this year and probably into next year. But if they do that, all they're going to do is make inflation worse, which is going to make it so that 30-year mortgages, or all mortgages for that matter, are going to be more expensive, not cheaper. So it's going to have the opposite effect on the mortgage market from what a lot of people are expecting. I think the only way that we're actually going to see mortgage rates come down is if we actually see a situation where an official recession gets announced, because when that happens, it's not like there wasn't a recession before. Obviously, we'd already been in a recession for a long time by the time they actually announce it officially. But the difference will be in everybody's mentality and how they move through the economy moving forward. Like already you can see credit card spending is flat, right? People aren't traveling and going to hotels and booking Airbnbs and stuff as much anymore. They're not flying as much anymore. Discretionary spending is taking a nosedive. And so if you actually have the government come out to tell us that we are in a recession officially, those figures are going to go down even further. And that would actually push inflation expectations down. And in turn, we might actually see mortgage rates finally come down. And I'm surprised that the Trump administration is not using that as like a play, just like a sports team would, to actually come out and announce that we're in a recession in order to actively get mortgage rates to come down, because people will pull back even further on spending. But I'm sure the reason they don't want to do that is because that's going to have a negative effect on the rest of the economy. Because don't forget, 70% of the GDP in this country is based on consumer spending. And right now, the housing market and construction stocks remain weak due to the persistently high mortgage rates. And the iShares of the U.S. construction ETF, the ITB, is down 15% in the past year right now. Home builders, as well as home renovation retailers like Lowe's and Home Depot, are underperforming right now, saying that people aren't spending the money to renovate their houses because people don't have the cash for that. And they're finally realizing that taking out debt to do it is not smart. Even lenders are suffering right now, as not as many people are applying for mortgages. That they've been suffering for a while now, the past couple of years, because people just don't have the money to go out and buy a house. And one thing that's funny is in this story that I'm reading off of here, they say that the stronger the economy, then the higher mortgage rates are likely to remain. Like they actually associate a strong economy with high mortgage rates, which in the past was actually true. That's not all just a lie. But the thing is that's different this time is inflation has been running hot for the past 3 years and counting now. And until that gets under control, I'm afraid that it's not because our economy is strong that mortgage rates are going to remain high. It is because inflation is too high. So I want all you young home buyers out there who want to become homeowners, besides making all the right financial moves and taking the right steps to make that a reality, understand what's going on in the market right now and realize why mortgage rates are not really coming down and why people are not rushing back in to buy, even though they're still lower now than they were at the beginning of the year. Now let's go over some of the latest home buying trends that we're seeing happen out there right now, because the current market conditions have been having a significant impact on what consumers want out of the housing market. Okay, in fact, there was a national survey from the America at Home study where they surveyed about 16,000 people, and they found out that people are willing to make some serious trade-offs right now to be able to buy a house. In fact, 40% of people would be willing to buy a smaller home right now just to be able to get into being a homeowner. 33% said they would give up a garage or have no garage at all if necessary. 25% said they would accept smaller room sizes. 50% would be interested in the rent-to-own situation. And then 32% of people said they would be willing to buy a modular or manufactured home. So you can see that the demand and the appetite for home ownership is still out there and alive and well in America, because people are willing to make some of these sacrifices to make it happen. But here's the truth. Even with all of those sacrifices, people still cannot afford to buy. That's the reality of the situation, and that's why home sales are sitting at 30-year lows right now. You can only make so many sacrifices before you're buying a house that you completely don't actually want just to be able to become a homeowner. Whether it's in the wrong location, the wrong school district, it's not big enough, whatever it might be, That's why so many people also have home buyer's remorse right now. And you're seeing so many folks who bought in 2021 and 2022, even 2023, selling their homes already just a few years later for a multitude of different reasons. Unaffordability is one of them. And the problem is, most of America's housing stock is not fitting the criteria that I just went over with you guys. And actually, part of the reason that people are willing to accept a smaller space right now is, according to the survey, 64% of the people said they are now smaller households made up of only 1 or 2 person households, and they are finding that they can make do with less space instead, so they're prioritizing flexible, multi-use spaces that support wellness rather than just the big house that I can't afford. Also, similar to the Gen Z buyers, which I'm sure a lot of these people in this survey are Gen Z, they are craving more amenities than anything right now. 54% of people said they want access to nature for outdoor activities. Look at me right now. I'm out here. I'm always making these videos outside, guys. I absolutely love coming for these walks, especially on sunny days like this when it's like 71 degrees out here and perfect. I live for this stuff. They also want walkability to coffee shops and restaurants. 48% said they want access to trails. People actually want to go hiking and have nature trails. 45% said they want to have small neighborhood parks with shade. So a lot of today's home buyers are willing to trade the size of the home in exchange for, space and experience and community connection, which I think is actually a really good thing. I think younger Americans are actually starting to go back to our roots. Look at all of the homes that were built. Like I've shown you guys many houses. In fact, a lot of these houses I'm walking past right here are probably a great example of this. These are all relatively small houses, 1,500 square feet or even less sometimes. And they were all built, in the middle of the 1900s. We're talking 1940s, 50s, 60s. That's pretty much the era all these houses were built in. We didn't build giant houses back then. You can see they also all have this similar type of architecture. They look kind of the same. And people who originally bought these homes probably had that same thinking in mind back when these homes only used to cost $70,000 or $100,000. It was like, yeah, this is great. This is close to parks. This is close to hiking. You got the mountain right over here with hiking trails. It's not far away from restaurants and my kids' school. This is perfect. But then once the secret is out and the area is very desirable, like here, especially because of the weather, then the prices go absolutely bonkers. And that's why young people are moving away from this nonsense and saying, you know what, we're going to start over. We're going to find a new community somewhere else where it is affordable, and we're just going to forge on from there. And I think that's great and very respectable that all these young people are doing this. Now, one other thing I want to talk about is how 1 in 3 homes were actually bought with cash in 2025. According to Realtor.com, nationwide, about 32.8% of home sales in the first half of 2025 were all cash transactions. And that's a little bit down from last year, but it's still above the pre-pandemic norms when it used to average only 28.6% of sales. Here's why this is important. Not because you have the money to pay cash for a house or that you should pay cash for a house. The reason why this is important is so that way you can understand why the median home price that you keep seeing is still kind of going up. Because people who have this cash typically buy very expensive homes, north of $500,000, north of $1 million. And in fact, more than half of the home sales, according to the National Association of Realtors, have been in that $500,000 or $1 million category of the homes that are being sold right now. So when you have a concentration of so many homes being sold in that category, naturally it's going to raise the median home price. And that gives the illusion that home prices are going up everywhere, but that could not be further from the truth. Cash buyers also drive up the very low end of the market as well, because 2/3 of homes under $100,000 and more than 40% of homes over $1 million were bought with cash, and 50% of the houses above $2 million sold for cash, guys. So that makes my case. That shows you that the reason why home prices appear to still be going up is because the very affordable homes get wiped out from cash buyers and the very high-end homes get sold to cash buyers. which gives the illusion that prices across the board are going up. And if you're in cities like Miami, 43% of homes are being sold for cash right now in 2025. This is the top metro in the country, guys, and probably has been for a long time. As you know, I live in Miami, and cash buyers have been a thing there really ever since the housing crash began. You know, people poured into Miami with cash from all over the world, and they still are, just not at the same level that they were back then. And cash buyers dominate almost half of the market there. San Antonio, Texas isn't far behind. You know, 39.5% of people are buying homes there with cash. Kansas City, Kansas, actually, 39% of home sales are cash. Birmingham, Alabama, almost 39% of sales are cash. Houston, Texas is almost 39%, and St. Louis is 38%. So if you live in any of those markets and you wonder why you have a hard time competing or being able to afford a home, well, there's your answer. The cash buyers heavily overinflate the values in any given area. Because when people can afford to pay cash, they can also afford to pay more than what the house would naturally appraise for. They don't really care. They just see the house, they want it for whatever reason, and they're willing to fork over the dough to get it. But I just want people to kind of zoom out and look at the big picture. You know, the big picture is that home sales are at 30-year lows, regardless of what's going on with cash purchases, regardless of what the median home price says. And things are really moving towards a buyer's market right now in the majority of the country. And that is good news for anybody out there who has been patiently waiting to become a homeowner over the past few years. So if you enjoyed this video, make sure you subscribe to this channel, and make sure you subscribe to my second Clips channel, which I have a link for down below in case you like shorter videos. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.